Today, we are going over a strategy for live day trading in real markets. This strategy, like all, are just building blocks for traders to craft their own unique way of trading. Take this information, tweak it, and mess with it until it works for you. But to understand these strategies, even though this one is pretty simple, you should watch our first few videos on our How to Day Trade series. Specifically fair value gap, break of structure, candlesticks, and trends. The videos are short, but make sure you take notes and be attentive. Okay, into the strategy now. This is an ICT trading strategy called the silver bullet. We trade this on futures, but you can try variations on Forex. It is an AM session setup. So the market opens at 9:30 a.m. Eastern Time Zone. Be on your chart watching for the trend mainly on the 15-minute, hourly, 4-hour time frames. Before 10 a.m., have a daily bias of which way the current bias is for today. If you need help doing this part, watch our video on daily bias. At 10 a.m., switch to the 5-minute time frame and wait. Be watching for a 5-minute fair value gap made anytime from 10 a.m. to 11 a.m. Once a 5-minute fair value gap is made, ensure it follows the same direction as your daily bias. If it does not, this is not a probable setup and do not trade it. If it does, switch down to the 1-minute time frame. Make sure the 5-minute is marked out and wait for the price to draw into the fair value gap. Wait on the 1-minute for one of two things. This is entry execution, arguably the most important part of trading because everything you have done to this point means nothing if you mess up here. It is best to trade in a quiet or at least calm environment so you can stay focused and on task for the short amount of time you have to work on the charts. Anyway, execution on this strategy is as follows. Once price has drawn into your 5-minute fair value gap, that is the same direction as your daily bias. Bullish daily bias would need a bullish fair value gap and vice versa. Wait for either a 1-minute break of structure within or out of the fair value gap, bullish and enter, or a strong reaction off the fair value gap. Price would have to show more volatility than it has normally all day, and you need to be quick for this one. If you miss the entry and it messes up your risk to reward ratio, just find another trade. You must enter this setup before 11 a.m. If price draws into the 5-minute fair value gap and does not break structure bullish or show a strong reaction, don't enter. A 5-minute invalidation of the gap also ends this setup. Now let's go over stop loss and take profits real quick. This is going to be vague because obviously it depends. Every situation and chart is different. But for the stop loss, look for a low high depending on the fair value gap and trade direction. Look for one right by the fair value gap, and if you can't find one close enough, just put your stop loss under above the fair value gap you are placing the trade off of. Just make sure candles like to wick through fair value gaps before respecting them. Do not exit your trade unless a 5-minute candle closes through your 5-minute fair value gap, invalidating it. Finally, take profits. For this one, depending on where on the chart you are at and how other sessions played out, I would target previous 10 to 11 a.m. swings on liquidity, or past London, New York liquidity within reason. That's all for this strategy. If you plan to use it on the markets, make sure you took notes. We have other videos to sharpen your skills, so when the market opens, you're prepared. Whether you're new to trading or sharpening your skills, Academy of Traders is here to guide you from the ground up, all for free. Join our Discord community to connect with other traders, ask questions, and keep growing through educational content. The link's in the bio below. Every expert started as a beginner, so take that first step with us today. Thanks for watching, and see you in the next video.